I think let's start with the top line numbers that we're seeing, because that's impressive there when you're looking at the margins, because EBITDA growing basically at a rate that's double revenue growth. How have you managed to do that?
I think it's all in our business model. It's all about its mix and geographic spread of businesses. So when we talk about mix, we're talking about the mix of technologies we represent, the mix in our business streams, sales to operators, end users, intermediaries, and our growing annuity services.
That's interesting. So is that a strategy that you've taken? You've looked to grow, tap into that annuity income stream and have that more predictable income stream?
Yeah, I mean, it's part of, obviously at our size, it's part of a multi-year strategy, which, we're into our 6th, 7th year of this, but essentially we're trying to make our business more predictable, and we're trying to improve the stickiness in our business in terms of the longer term transaction or annuity based revenues. When we talk about geographic diversification, which is the other, so that's a driver. So business mix is a driver to our margins and inherent leverage. And the other one is, of course, our spread into developing and emerging markets, which in this reporting period, 40% of our profits have come from South America, Africa, Middle East and Asia Pacific. 5-6 years ago, 20% of our profits came from those markets, mainly in the Southern Hemisphere. So that's also helping rebalance our diversification and our mix, and change the exposure we have to North America and Europe, which is still very important in our overall contribution, but it's helped mitigate some of the slowdown effects you've seen in the rest of the world.
Let's look at that then, because before we go into the various divisions right now, where are you strong in Europe? Because you have made some acquisitions, interestingly enough, through your Westcon division in Germany, in the securities division. So why buy further into Europe right now at a time where there's so much uncertainty? Or what is the strategy to deal with Europe?
So let me answer the European piece first, and then the M&A part of your question later. So Europe's a big block for us. It's pretty close to North America. It's about 34-35% of the total mix. It was slightly more than that the year before. So obviously in terms of slightly weaker euro and no growth in Europe, its overall weighting has come down. Still, we have a very profitable business and very profitable franchise in Europe. And that's, one needs to unpeel the onion a little bit in terms of our European exposure. We've always been very big in the UK, which has been challenging in the last couple of years. So that's already in our numbers. So the UK is about 40% plus of our total European mix. Germany is just over 20%. France is the next biggest country, 10% or so, 10-12%. And then Benelux, Netherlands, Nordic countries, mostly make up another 10%. So you can see our exposure to Southern Europe is relatively small. We have some presence in Spain, but again, it's in markets like security, data center infrastructure and so on, that appeals to enterprise and corporate customers.
So business is spending in Europe right now. How are you positioning yourself? Is there a slowdown in spending, or how are you positioning yourself in Europe right now with your product mix?
Well, in the year ahead, we've penciled in no growth for Europe, and maybe sitting here this time last year, we would have expected some growth. So that's again in our numbers. So in our guidance for the year ahead, which is 10% plus revenue growth, 15% earnings growth, which would be continued it would demonstrate operating leverage. In there, we were expecting no growth in Europe. And again, there's winners and losers. I mean, you saw the numbers yesterday from Germany. They weren't that bad. The UK has just gone through a mild recession. The UK feels a bit better for us now than we would have said 6 months ago, even though we're not expecting any growth there. We wouldn't have said that a year ago.
Interesting, in your Westcon division, of course, a large chunk of your revenues coming through from there. Revenues up by 17% in that division. 74% of your revenues for the overall group come from that. Cisco, you're a big distributor of the company. Tell us about the prospects for Westcon right now, because you have been making some acquisitions in that division. Yes,
obviously you would have seen Cisco's numbers last week. Maybe just worth pointing out, obviously we have about 50% of our business is related to Cisco technologies and Cisco products. Unlike Cisco, we don't have as much exposure to federal or European government. It's one of the things they mentioned in their reporting last week. In terms of the other trends they see in their business, they're pretty closely aligned to obviously what we would be a proxy, I guess, for a lot of that. We do have also disproportionately more exposure to South America, Africa, Middle East and so on in our mix, so that you've got to unpack that as well. But what we're seeing in our industry, despite there's some economic challenges, especially in Europe, we are seeing that some of the more, let's say, secular, longer-term trends in our industry are still favourable. Security, data centre build-out, the explosion in mobility, next generation 4G and LTE coming online. Nobody really knows what the impact's going to be on consumer and, PDA usage and so on. So all these themes are still, very strong in our industry because we're picking, a lot of those sectors in our products and services.
You've made acquisitions, interestingly enough, in Indonesia right now, and that's perhaps extending your foothold in that part of the world. Tell us about that market, why it presents such an exciting opportunity for Datatec.
Well, in acquisition in general, you pointed out we did one in Germany last year. Right now, and it's been the case for the last 18 months to 2 years, our M&A focus is strategically directed at Latin America, parts of Africa and Asia. We will do transactions in Europe and North America, but they're more tactical and they would be aimed more at opportunistic
cheap buys.
Things, exactly. They might be stressed or distressed. In the emerging and developing markets, it's a different focus. Strategically, we're looking to increase our footprint and then bring in our products, services, processes, systems and so on to gain scale. And Indonesia is an example of that. So in our two main business streams, business lines, Westcon and Logicalis, both of them entered Indonesia last year, one through a joint venture and one through an outright acquisition. And there are other markets that are on our list from Mexico, Philippines, Thailand.
Yeah, so you mentioned Africa, of course, in this whole scope of growth going forward. How are you growing into Africa and how much attention and capital are you putting into the African continent to enhance your presence there?
We have a presence in 8 countries across Africa, and we have had for 2 or 3 years, and we're big. We've been in South Africa for many, many years. So our footprint is pretty good. We're looking to grow now, less our footprint, but more the diversification of products and services that we are offering in those markets. Service providers and telcos are a catalyst to let's say the adoption of our business model in many of those markets, and we see that as very positive. We see, opportunities most probably for Africa to emerge not just as a resources continent, but maybe as an energy supplier, especially in areas of, clean energy and so on. And we don't touch these industries, but we think that the trajectory of all that is going to be positive for the the technology areas that we play in.
If you're looking at revenue increasing to $5.5 billion to $5.8 billion this year, where's that growth going to come from? Because that's quite an increase from this year.
Yeah, well, we've given guidance a range. We've given 5.5 to 5.8. I see you've picked the high end, which is fine. And I guess we've got a little bit of flex in there because we traditionally don't forecast or budget for M&A activity, but undoubtedly something will show up. But at the low end of our revenue guidance and what we've indicated for our earnings guidance would show that there's continued operating leverage going forward. We've been cautious in terms of the absolute growth. We're saying it's going to be low double digit. Because of the situation in Europe. And most of that growth is going to come from markets. South America, again, we think will be the star performer next year. The Middle East is strong for us. And parts of Asia. Australia has slowed down a bit. Things are fairly tricky still in South Africa. But, net, we feel that it will be an okay year this year.
Thanks for joining us.
Thank
of
you
course,
very much.
Caution and underpinning some of the outlooks that we have had at the moment. We're going to have to leave it at that for today. Gents, Montanana, the CEO of Datatec.